Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Lou Whiteman and Tyler Crowe giving a 1 to 10 rating to HVAC giant Johnson Controls, ticker symbol JCI. Talk about the business first, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Both of you have 7s, Lou.
So just a few years ago, this was a much bigger, much more complicated, sprawling business. The auto business is now adient. They've sold off other stuff. They are now focused on HVAC and building equipment for the commercial market. That's very important. It's like mostly the commercial businesses here. They've gotten a bit of a spotlight thanks to the data centers and the need to cool them. That is sort of a, at least temporary tailwind. But look, this is a well-rounded, big portfolio of fire, climate control, security, smart building features, much more than just one trend. It's one of these picks and shovel choices for kind of the modern commercial real estate industry. It's not without competition, but it is a really, really solid suite of products.
Yeah, 7 as well. You know, it seems like ever since, what was it, like 2016 when it merged with Tyco, if anybody remembers Tyco International, you know, that one that caused part of the Sarbanes-Oxley Act of 2002. But pretty much since then, they've been shedding assets and kind of went from a diversified, some might say diversified manufacturer to, like Lou said, you know, commercial building product focused. It's definitely in a better position doing this. I have yet to see a company that actually slims down and focuses on something and it's done worse. So good on them to do that. But, you know, and commercial buildings do tend to be longer term in nature versus residential, and they will carry a higher service revenue component. So it'll kind of take out a little bit of the construction cyclicality that you might see in most sort of like HVAC and construction related businesses.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Tyler's at a 5. Lou, you're at a 7.
So we're in a period of transition here, which makes it tough for me because I really like both sides of this transition, but it's also the unknown. Last spring, Hakeem Wiedemus replaced George Oliver. I love George Oliver. He was great at Tyco. Tyler, say what you want, but I loved what George Oliver has done. He was great with Johnson Controls. I think it kind of cleaning up the mess and creating a company. So big shoes to fill. But I love the new guy's resume. He came from Danaher, which in my mind is one of the best managed companies of all time. So he's got that great DNA. I think everything should be fine, but my grade is brought down just because transitions aren't always smooth and we don't know how it'll go until we've had time to see.
Yeah, I went with 5 because it's, like I said, hard to judge new leadership when they're new and also coming from outside of their rank and file. But hey, look, when we do these things, I always have a bone to pick about something. And mine was with the board of directors. Look, in their proxy statement, like last year, their investors told the executive team, like, look, you need to put some like return on invested capital targets for this management team in their compensation because that's been a struggle for them for a while. And basically the board told them to go pound sand. And I was like, that's not great when you're not listening to your investors. So look, the new CEO, like Lou said, came from Danaher, which is really well known for efficiency returns. So there's a possibility there. Hopefully he can inject some of that corporate DNA that, like, you know, former Danaher CEO Larry Culp did to General Electric. And if you wanted to paint the most ambitious target for Johnson Controls, it's basically Culp to General Electric.
For financials?
I'll take that.
Right. For financials, a 10 is a fortress, a 1 is yikes. Both of you have 7s, Lou.
Yeah, so this is a solid, profitable business, $14 billion worth of backlog of future business at the end of last quarter. They are targeting 100% free cash flow conversion in years to come. Now, granted, they got to get there, but you like to see that. It sets up well as a really mature, solid, profitable industrial company. Balance sheet could be better, $800 million in cash, $11 billion in debt, but plenty of cash to support the dividend. I'm not really a worry. One potential word of caution is that from George Oliver to Danaher, there's a lot of M&A just kind of in the DNA here. I suspect there will be other deals on the horizon, maybe, which, you know, I wouldn't cheerlead that, but it's at least something I have to consider here as I look at this balance sheet and what they might want to do with it over time.
Yeah, I went with a 7 as well. Balance sheet is fine. No real gripes there. Margins, not great. Perhaps that's going to improve with some of the divestitures we've seen. And we don't know what growth will look like after so many divestitures, especially in like residential markets, which has been a little bit more growth as of recently. My big gripe and kind of related to the board problems we had is return on invested capital remains pretty weak for a business. It's supposed to be new construction, service, things like that. And we're hoping that Wiedemann's can make strides here. Also, like, they haven't raised its dividend since 2023. Really kind of want to know what's going on there.
Tyler, let's move on to valuation. How well will Johnson Controls stock do over the next 5 years? And how safe is it? 10 is a sure thing. 1 is a lottery ticket.
Yeah, I did 5 to 10% returns with a safety score of 6. The upside is that management is able to squeeze out those efficiencies like I was talking about, which would lead to higher returns, higher margins, cash flow, all the things you're looking for. However, 34 times earnings for a mature business in a bit of a need of a corporate shakeup is a hefty premium that, could be a stock headwind for the next 5 years.
Yeah, valuation. This is where it gets hard for me. Trading 21 times expected earnings when you factor in debt, so not cheap. And it is, as I said, a mature business. I feel like the near-term bull case is putting a lot of weight on the data centers, and I think we've gotten ahead of ourselves there a bit. So I end up at market perform, 5 to 10%. For safety, a 7. The demand is out there. Management knows what it's doing. I feel pretty good about the downside risk. I just think that it's going to be tough for them to beat the market.
Let's move on to everyone's favorite. Tyler, top it. Tyler, is there a company in Johnson Controls space that you like more?
I like that Freudian slip. Everyone wants to know what my thoughts are at the end.
Right?
So I went with Lennox International. Not exactly the same type of industry, lot of HVAC, refrigeration sort of associated. Kind of very much in that echelon of the Danahers and the Dovers of the world of just incredibly great returns, very good balance sheet. And also right now, Lennox, I think, trades for a lower valuation. And maybe it doesn't have as much of the sexy data center exposure that some of these other ones would. But this is one of those businesses that, may not necessarily wow you, but is going to take care of your money in a good way.
I went for an even lower valuation, and arguably the last few years deserved. But I do believe you want to buy at the right point of the cycle with these companies because, it is a mature market. Carrier, which was spun out of United Technologies, it has been the laggard in the industry. It kind of deserves a lower valuation than Lennox and Johnson Controls, but I think they are on the mend. Bad earnings aside, and I think if you want to kind of dabble here, betting on an upswing there is probably a better market beater bet, although with a lot more risk.
You guys mentioned Larry Culp at GE Aerospace now. Look at that chart over the last few years in terms of what lose point of buying at the right time versus the wrong time. It's been a good few years. Thank you to both Lou and to Tyler. They've given Johnson Controls a meh overall score of 6.3 out of 10. With neither Lou nor Tyler especially excited about the future returns prospects. Maybe Lou a bit. Maybe not. No. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Equifax. Till then, Fool on.
We just compared Jack Welch to Gary Glitter.
Yeah. Lawsuit pending.